Good afternoon, everyone. Welcome to RedSwan's first Houston event. We are happy that you guys are all here. We have a panel lined up for you that's going to talk about real estate, blockchain, and everything in between. So let me go ahead and introduce our panelists. We have Samantha Lewis, principal of Mercury Fund, Chris Rector, managing director at Hines, and Aron, founder and president at Hunington Properties, and of course, Ed Nwoked, founder of RedSwan. And now I'm going to introduce our moderator, Miss Zena Williams. She is, well, let me tell you what she does. She helps facilitate local partnerships between best-in-class prop tech innovators. So again, thank you all so much for being here, and let the panel begin.
Yes, like Sandy said, thank you for being here. Thank you guys as well. Guys and guys. I'm looking to start off with an introduction of the subject itself. And I wanted you guys to kind of take turns talking about what the broad application and use cases of blockchain are. And you can be specific to your business, and then I'm going to individually ask you questions, right? Because we kind of discussed what we're going to be talking about here and how that applies to some of the people who might be sitting in front of us. So, broad use cases. Do you want to start, Sam?
Get active.
I don't know. Okay, let's get your mind together. Samantha.
Sure.
Because you have a really good application.
Okay, hi everybody, Samantha Lewis. Like they said at the beginning, I am a principal at a venture fund here in town called Mercury Fund. And so we invest in early stage startups, so seed to Series A software companies. I specifically lead our Web3 thesis. So Web3, for those of y'all that don't know, pretty much means anything that touches the blockchain. And so Mercury's been around since 2005. We have always invested in B2B SaaS infrastructure companies. So thinking a lot about what it takes on the infrastructure side in software to allow businesses to run their operations and do that in the most efficient way possible, and then find ways to always connect with their customers. And so now when I'm thinking about blockchain solutions, Web3, crypto, for what we do at Mercury, it's super aligned with that. And so I'm really focused on B2B infrastructure plays. So we do a lot of investing in supply chain tech that touches blockchain. We have looked at quite a bit of real estate technology that touches blockchain. We've also done some media and content and gaming infrastructure. So allowing people that might not necessarily know how to onboard into the Web3 world, meaning like hold a wallet, hold crypto tokens in your own wallet, set up those wallets, and then know what to do with the assets once you have them. We invest in companies that allow businesses to access the Web3 features and benefits, but without having to have blockchain engineers on staff. So what we're really focused on is really just thinking about how do we onboard, the next billion users into Web3 and a decentralized and tokenized world. And so that's where I spend a lot of my time.
Great, thank you so much. Chris, what do you have to say on this?
Well, I'm by no means a blockchain expert, and I have a very basic and elementary understanding of the technology, but some of the characteristics of the technology are really interesting for us at Hines, and one of those is obviously just the secure, peer-to-peer, immutable nature of the blockchain. Those are things that are interesting in an asset class rather that has been challenged in some ways. In the past, historically, real estate has been a very liquid asset class. So you had to have a lot of capital on the front end to invest, at least in commercial real estate. And then being able to, if you were wanting to buy that, you have a limited pool in terms of buyers. And I think with the advent of some of the crowdfunding technology, the crowdfunding rules and regulations, and the platforms that are out there actually raising money by crowdfunding, that solved one aspect of the challenges with real estate liquidity, but in terms of raising that capital or allowing people to invest in it. But the challenge still remains for those who want to transact and sell out of their ownership positions. And so the way that we're looking at this or thinking about it, and what I'm engaged in right now, is understanding how we can take a capital stack, crowdfund it, and there's a number of ways you can do that. But go and crowdfund that traditional limited partner stack, your capital stack, and then create an underlying or an ownership position, tokenize a digital share, a representation of that individual owner's underlying ownership, and allow them to take that and trade it and sell it to other people, either in part or in whole. And so that's really what we're looking at doing, is trying to further democratize real estate as an asset class.
Perfect, perfect, thank you. Sandy?
Yes.
So,
Well, thank you. I'm president and founder of Hunington Properties with 4 decades in the business, commercial real estate. The 2 sectors that we're most focused on over 7 states has been multi-tenant retail and multifamily. What we have learned in the 4 decades is that going from the old school concept of going to the country club or the church or the watering hole and passing around the plate and showing a presentation that was just old basic syndication. And then fast forward to the days of tenants in common. We ran from that because we saw that it just was doomed to implode. And then came crowdfunding, and we kept trying to figure out how to contact somebody about crowdfunding. What we finally did, we came to realize that they just weren't mature enough to step into the equity position we need for the various transactions we're doing. What we learned from them is, we'll buy a piece of a project that you already have established. And then, crypto came around, and to my colleague on the left's point, I didn't even know how to spell tokenization. I had to go find a Gen Z who helped me out with what that even meant. But as we've come to be more educated about it, and through Ed and RedSwan, there's 2 aspects for us. We got finished product that I could go to the marketplace and sell, and after the closing, I'm done. Or we can take that same asset and go tokenize it and still maintain the GP position and some of the cash flow and operation, and to be able to continue bringing the other services that we have in our company onto the platform to allow it to grow with that many eyeballs that now are focused on us, as opposed to the very limited number that we have had in the last 10 years since we finally opened the door to start taking equity. Prior to that, we did not take equity, and it was all self-funded. Now the challenge that we're both learning is how we might be able to take ground up opportunity and let the mass crypto world participate in a ground up project, to then go through the exercise of what we do after we complete it and stabilize it, is to go from construction loan to permanent loan. What a great opportunity for the world to be able to tap in to what we think is a pedigree track record of 4 decades. So as I teasingly say, after all these economic tsunamis, I still have all of my limbs, and we're looking forward to going forward with Ed and his group. And stay tuned. This is going to be very exciting.
thank you. So same question, but with a twist, I think, because we're here to talk about CRE, right? So application, going broad, can you bring it down to what RedSwan CRE does?
Sure. Ed Nwoked, I'm the founder and CEO of RedSwan. We founded RedSwan basically to provide liquidity to commercial real estate, making it more an open option for people to get into into high quality real estate as an investment without having to break your bank. Prior to RedSwan, I was executive director at Cushman & Wakefield for over 17 years, and in that position I had seen a lot of pain points in real estate. One from the sponsor side, guys like Sandy, who own real estate and tend to be, probably not Sandy in this case, but tend to have a lot of real estate, but also looking for liquidity. And when you look for liquidity, it means you have to sell your asset, usually to get the liquidity so you can pay off all your shareholders. And I noticed, not to say, but through other examples, that some people had shareholders calling on a regular basis saying they have been in this investment for 3, 4, 5 years and I'd like to get out, but it wasn't the right time to sell that asset in order to pay that person off. So they had to keep waiting and waiting. So we found that there's a big problem for sponsors to get liquidity out of their asset without having to sell it first. But then on the other side, for the sponsors, the investors, they had a hard time buying into quality properties. I used to get an assignment that maybe a brand new apartment building, I'd make 10, 15 phone calls to all the major corporations like Starwood, KKR, and they would rush to the property, put their offers in, and we get it closed. Very few times, if ever, I had the opportunity to talk to just average individuals who might want to buy into a quality asset. And I just thought that was really unfair that all the quality assets are going to institutions, and private investors like myself and many of you have to be tolerant about the real low quality 2-story or duplexes because you can't afford to write $15 million check to become partner with someone like Sandy. So in 2018, the SEC made a mandate that security tokens could be used for financing. And I went to a blockchain conference at the request of one of my co-workers back in the day, and I wasn't really, I couldn't even spell blockchain either, so I was not interested in going to this conference, but he insisted that I go. He thought that because I had a technical startup that we did well with back in 2000, I'd be very interested in this technology. So I went to this conference, blockchain conference, and I was really floored by, first of all, how many young people were in that room who were making millions of dollars on cryptocurrency. But when I looked at the exhibits, I was able to see a lot of the uses of blockchain separate from cryptocurrency. And the light bulb just went off right there thinking, oh wow. So this is a way that you can actually fractionalize the equity of ownership of real estate, just like stocks and bonds. And I figured that was going to be the way of the future, especially since the SEC made it legalized. So the first thing we did was started transitioning from a job at CW and started RedSwan and started to try to educate clients like Sandy, who again didn't know how to spell blockchain and thought I was crazy. But eventually some clients started to trust our opinion and let us go ahead and tokenize their assets. And I think that now people are starting to see the true benefit of how blockchain technology actually can work for commercial real estate. Because all of you can now buy into Sandy's projects and have minimum investment even $1,000 to $10,000 as opposed to $250,000 to $500,000 or more, which makes it a lot more affordable for you with your discretionary income, but also gives you options to buy not only into this project, but you can probably buy into several projects of similar quality and diversify your own personal portfolio. That's what the blockchain does for commercial real estate as we talk about tokenization, and that's one of the reasons why we founded RedSwan.
Great, learn heritage. So you guys all have an application, whether that is broad or different from exactly tokenizing commercial real estate, because people have a hard time differentiating crypto from tokenization or tokenizing an asset. But you guys are in this, so what headwinds are you facing? We're going to start with that this time.
Right, people definitely mistaken. When you mention blockchain, first they think of this cryptocurrency and Bitcoin. But they're two separate technologies, both based on blockchain. The cryptocurrency is a currency that's not regulated by the SEC. It's a currency like a dollar currency that people use to trade amongst themselves. There is no asset backing with cryptocurrency, so it fluctuates based on supply and demand. But if you look at blockchain technologies related to security token offerings, it's actually representing an asset, hard, durable asset like real estate. And you can now use this technology to fractionalize it like an IPO. So you're really taking a piece of real estate, the ownership of it, which are the equity shares, and converting it to an IPO so you can now have shares of real estate that you can trade on the stock exchange. That's really what's happening with it. And so when you hear about a lot of the issues with regards to people losing their wallets or losing their control keys with the cryptocurrency, that can happen because cryptocurrency is like cash. If you have the wallet and you have the access, you can take it and they've lost out. But on the flip side, when you look at the STO security tokens, they're not like cash. They're actually buying an asset. So if you own 10,000 shares of this building, you own 10,000 shares of the asset. Any of the profits that the asset makes, any appreciation in the asset as well. And if somebody takes these coins out of your wallet that you're holding, you can actually just come back and have them burned and be issued to you. So you don't have a lot of theft issues when it comes to digital assets.
And commercial real estate doesn't grow legs and just walk away, so.
That's true. You can actually point to the property, you can see the property. And I think that's what makes it interesting. Like I said, you can start buying properties all over the world and have fractional interest of it. And if you want to start controlling properties, you can just start buying more shares in the properties, so you have a lot more ownership interest and hopefully some kind of decision-making down the road.
Great. Sandy,
Could you repeat the question?
what kind of headwinds are you facing? I mean, I know that when you'll talk about this later, you guys are tokenizing properties. Or what are you seeing that you see as a potential or feel that might be a potential headwind to tokenizing properties?
Well, as I said earlier, we have the obvious option is just go out to the market and sell the projects. And in the recent 10 months, we divested of 23 shopping centers and 2 apartment projects. And that event's over, and we then take advantage of the 1031 exchange, which is a tax code that allows us to take those funds and replace them into another asset. It kind of has a dead end. This process of the headwinds with the opportunity to take advantage of it is beyond our comprehension, because we're going literally worldwide, and there are people who, well, let me back up. There's folks that are the institutions, there's family offices, and then you have below that, high net worth individuals, and most of them get to see these packages all the time. But when you fragment that out into the tokenization world, the crypto world, you can just let your imagination run all over the world of people who can go online and see the package that I'm going to present to you right here in Houston, Texas. And that is just incredible reaching for us. And
yet, have you faced any headwinds in that, or no challenges yet?
we don't see any challenges from that, because, it's either you step in and you want to participate or you don't. Now, after we have set this in motion, Ed gets to be the front person, gets to talk to all those people after we've gone through the tokenization, so I haven't had to deal with that so far.
Excellent. Chris, thank you.
Yeah, I think some of the same challenges that the other panelists have faced. Hines, obviously, we've been in real estate business for 60 years, and we've been doing it a certain way. And I think anytime you try something new, people are going to say, why are you doing something different if we've been successful doing it this way? I think right now, the challenges we face are association with cryptocurrency, blockchains, association with cryptocurrency. And if you talk to a lot of the groups that are offering the tokenization services out in the marketplace, many of them are trying to disassociate with cryptocurrency, or even the term tokenization, they're actually terming these digital shares. They're wanting to associate with shares like shares you think of in terms of stock or other ownership interests. And so I think just convincing others to try something new is always a challenge. But the other thing I think is, if you think about, at least in terms of how we structure it, we have a group internally called Hines Securities, and they raise retail credit investor money where investors can invest in Hines one-off developments or portfolios of assets at minimum $25,000 investment allocation. So it's a relatively low basis relative to going and buying a big real estate asset wholly yourself. But within that pool of capital, most of those assets are their development assets to date. And when you're building to sell in sort of this 3 to 5 year period, people may or may not see the utility in creating liquidity. If they say, well, that's my business plan, unless something really bad happens, I'm not looking to jettison my position, and so I'm fine, holding that as is until the term and selling it per the business plan. But where I see this is in times, especially like right now, in a period of macroeconomic uncertainty, what would be really great is if we could go out to retail investors. We all need return on capital, even in times things are slower. And I think if you could create the opportunity for investors to have the ability to hold something for a longer duration, let's go and build it and hold it for a 7 to 10 year period. It'll be stabilized for 3 to 5 years post-development. That creates an opportunity for somebody to hold something, have it appraised, value it, they can sell it out into a marketplace based on the stabilized value. You don't have to guess what it might be worth during the development period. So I think a challenge has just been our business model. So maybe thinking about longer term structures, creating a simple way for people to get through what a traditional promote sponsor or a sponsor promote might look like. So really simple return of capital, straight split type structures on your promotes, I think is something really interesting that we should all be thinking about, and making it simple for the investor to value their position and liquidate it.
Simplification is always a great pause. Samantha.
For sure. Yeah, so many headwinds right now in the market, but actually this is the time, as other recessions have shown, really the time that some really amazing technologies and companies get funded and make their breakout. And so from a venture perspective, we have to take a long-term view on the economy, because we typically hold our investments that are also in, they are very non-liquid. And so we end up holding our companies for like 5 to 10 years. And so we're thinking about that a lot in the companies are doing that. So where is the hockey fund going over the 5 to 10 years? How can we invest in that? I see the biggest headwind right now when it comes to tokenizing real world assets, in our case right now, and talking about on this panel, real estate, are 3 key things. I think there's trust. There's a lot of retail investors who have lost a lot of trust in cryptocurrency and in blockchain in general, because of a lot of the things that have happened over the past year, specifically Luna and the stablecoin. And I don't know who all follows that, but that was quite a big fallout, and it really burned a lot of people. And so when that was being used as a hedge, and that was being used for a lot of trading strategies as a stable coin, it really ended up just wiping a lot of people out of the market from a crypto and a token standpoint, whether it was real world assets or whether it was cryptocurrencies. So I think building trust back up is super important right now in the next year or two. I also think accessibility, making things more simple, and those are the type of companies that I'm investing in. And so how do you make it more simple to where my mother or my grandmother wants to invest in real estate that's tokenized, that she knows how to go to Ed's site and get on and do that in a way that she might know that it's a token and that has something to do with blockchain, but what she really understands is she's putting her money somewhere and that money's going to eventually come back out. And so I think that's a huge problem that we have to solve, and technology is going to be a big part of that. And then of course, the macro headwinds, I think, are on everyone's mind right now, especially when it comes to retail investing and the drying up of the money supply, and do people still have the type of capital to be able to go into new asset classes as a retail investor. So that's how we're thinking about it when we think about the retail investing space.
I just want to comment on that too, because the headwinds we're seeing right now in the market are real significant, and really it's taken, I'd say, COVID and now the interest rate spikes to get many people to start paying attention, leaning in. Some already knew about tokenization, have been working on it in terms of the plan, but I think it's really ramped up the adoption in the past, I would say, 18, 24 months, because tokenization allowed people to really sit under Zoom, have phone calls, but also look at other options. You see that in the office category, many people are not coming back to the offices, and you see a lot of empty offices. I was in New York 2 weeks ago, and I would say the average occupancy physical was probably 25%. No one's really talking about it, but when you start looking at capital to extract your asset and figuring out how you can allocate liquidity, this is a new conversation that I'm finding a lot of these major property owners want to have. Why? Because in today's world, they have to go out and get capital. They're going to be talking to the same players to go get the same kind of capital they've been going after before. But when everyone in New York and everyone around the world is looking for that kind of capital right now, the price is going to go up, right? And so tokenization gives you another option of capital. Now all of a sudden you're going after a digital audience, people who own cryptocurrency are looking now to flip out of crypto and going to something more stable because they've had a rough ride with crypto in the past 18 months. And so I talk to some owners and say, look, would you like to have an option for your capitalization? Because you're going to go out and try to raise $100 million to save your office building, but yet, your LTV or LTC of your building is probably, it was at 65%, is now at 95%. So your banks don't want to talk to you because they don't want to they can't get further indebted in that property. And then your institutional capital wants to talk, but their rates are very, very high, so they understand your predicament. So I think being able to go after a retail audience of clients is probably another option that you don't have, and many people have now started to look at that as a secondary source of refinancing. Also, selling a property has been the norm for property owners. You build it, you hold it, you stabilize it, you sell it, or you buy it, you do value add, and you sell it. And that worked out extremely well when interest rates were going down, right? Because there's always going to be a higher price to take you out. But now, interest rates are going up and cap rates are going up. So holding it and then turn around and selling it down the road, you're now having to take another look at that and see what sources of ways do I have to preserve my capital or try to get my equity back. And I think if you can imagine in the future, if all assets are tokenized, you won't have so many assets being sold from one person to the next as a B2B process. You'll now start seeing them hold on to their assets because they will pull all of their capital out of their asset, still maintain their GP position, and still be able to have a reset their promote, which means they can now have a new set of investors that they're paying out an interest rate to. It still allows them to have an upside. If the asset goes up in value, they're still able to now share on that upside over and above their promote. So I think that you're seeing more options with digital capital than you saw before, and people have started to look at those options as being very meaningful.
Speaking of options, Samantha, I think that you have a very interesting use case that Mercury Fund is looking into, right? And it is driven by impact. Can you talk to us a little bit about that and what's going to happen here? So I'm going to ask you guys a set of questions, obviously, that pertains to how you are currently applying blockchain. Yeah.
Sure. So going a little bit further on what I was saying in the intro, the type of companies that I want to invest in specifically, my thing at Mercury, which is called the Power Thing, and that's all about empowerment. And so it's thinking about how we use technology to open access for people to capital, to opportunity, to really allow people to understand how they're spending their money in a way that makes sense for them. And so a lot of that has to do with financial inclusion and driving impact with technology. And so it's pretty incredible the type of startups that we're seeing around. But one of our blockchain use cases in this space is a company that actually is out of Rice University. It was 2 Rice PhDs and another Rice grad who got together and they started a layer 1 protocol called Topple. And so Topple exists. They built the L1 for complex global supply chains. So think agri-food, energy, and financial inclusion. Those are the 3 verticals they're going after first. And what they're doing is they're tracking real-world assets. So let's think coffee beans, for example, in an agri-food supply chain. So they're able to track that from the farmer in any remote area of the world all the way to the buyer of the coffee beans. And being able to do that and then wrapping that all in a lens of financial inclusion so that if I'm drinking that coffee, I'm buying those coffee beans, I know that that farmer got paid a living wage. And so right now there's a huge trend with UN SDGs, there's a huge trend with ESG, and people really caring about making sure that we just get to spend money in something that feels authentic to what we care about. And blockchain is actually a perfect use case for allowing that because it's transparent and it's trustless. So we know that what happens on the chain is real. And so then from a consumer standpoint, consumers are willing to pay anywhere from 25% up for something that they know was sustainably or ethically sourced. And so that's a perfect use case for blockchain. It's the most impact-centric one that we've done so far. But I really think about that in democratizing access to anything. And real estate right now is such an interesting asset class for people to get exposure to. When it thinks about democratizing, when we think about democratizing access to ways for people to make money and invest that money.
So obviously this is something new. Tell me, Samantha, how did your colleagues react to these decisions? Was it, part of the short-term strategy, long-term strategy? What was the overall reaction within your environment?
Oh, half the time they look at me like I am crazy. Like Sam, and those my partners. Half the time they're like, what are you talking about? But we usually get them there. And so I think the key thing that people just really have to understand is that go-to-market strategies and what traction looks like and what success looks like in a Web 2 world is not at all the same in what it looks like in Web 3 world. And so Web 3 is very community driven, and so traction looks very different. And so typically, I can get them there. It just takes a while. And yeah, I joined the firm 2 years ago. I've been talking about blockchain, crypto, Web 3 since. So we've come a very long way. And I feel very supported by everyone there, but it's definitely a long-term strategy for us at Mercury Fund. We just went out and raised our 5th fund, and part of that strategy was that we will deploy more capital into blockchain startups going forward. And so our investors are very excited about it, our partners are very excited about it, and we're finding a lot of really great companies in the space right now.
If I have to think about blockchain, automatically assume is that it's a disruptor, correct? So have you seen the disruption, and if so, in what way? And obviously there's healthy disruption and there's other kinds of disruption. I think we're talking about the good kind of disruption. Tell us.
My turn still. Okay, so the key disruption that I'm seeing right now is the ability to, and I know this word gets overused, but it's absolutely true for the blockchain space, which is democratizing access. And I think that's so important to what we're talking about on the panel today, because now you have access to an asset class as a retail investor that you never had before, or a smaller institutional investor. And that's really, really key. So like that disruption is really interesting, but then that flows all the way through everything. So if you really think about venture capital, we're also just a middle person, right? LPs give us money, and then we give that money to startups. So like our world is also getting disrupted. So I'm on the startup committee of one of the largest VC-run DAOs, investment DAOs, and that is completely disrupting how we do venture capital. So it's coming for me too. But I think it's all good because it's about democratizing the access to opportunity and capital.
We're going to move to Chris and Hines. Thank you so much, Samantha. So Chris, I think that every challenge or every solution comes with a challenge. What was the challenge that investors were facing that you guys went in to solve?
Well, I think it's just being subject solely to our whims as a sponsor. When we put them into a deal, we control everything from that point on. And I think if I'm putting my hat on or sitting in that other chair, I don't know if I like that. I want to have the ability to control my own destiny and to have some rights and the abilities to make some decisions for myself, including if I think something has realized its value, or at least what it's worth to me, I want to be able to get out of it. So I think this is what that does. So it's really about just, I think, putting on the hat of our investors who, they're the most important people in our business. So that's why we're interested.
Awesome. So liquidity, right? So in another sense, so in another sense, besides liquidity, what else are you guys doing in terms of innovating And how is that affecting the people you work with, right? Kind of same question I asked you, Samantha. And how is that affecting your investors, right?
Well, if I were to just very candidly, I mean, I think this could be a big disruptor. If you think about how, even on the institutional side, on one-off individual real estate asset, what's happened in the past is a company like Hines will hire what's called a capital markets broker, and they'll go out and talk to all their relationships across institutional capital, maybe wealthy family offices, but people who can write big checks. And they get a commission to do that. And so I think having the ability to further go downstream and disintermediate, take some of those friction costs, if we're out able to raise through a Hines retail network, we don't have to pay a capital markets broker. But we do have intermediaries that are still collecting fees on some of those investments from those retail investors. And so what could eventually happen is we could eventually have, our own landing page where investors could invest directly in a Hines asset without having to go through any sort of intermediary, reduce their cost of capital, lower our cost of capital as well, candidly, create better returns for everybody. So at the end of the day, that's what this is all about. That's where I see it going, but it's going to be painful for some people.
So were you mainly tokenizing SPVs or individual assets?
Right now, individual assets, but I think it could be at a fund level. I think you can do a portfolio of assets. I think it could be across the spectrum. Right now, we're working on a single asset.
Let's talk about liquidity. In order to be liquid, there must be a secondary market. How do you plan to tackle that? Are you building in-house? Are you going to look to a third party?
I think long-term, we could go in-house or at least create a peer-to-peer network where people could trade in and out within a Hines ecosystem. But I think today, we'd probably go with a reputable secondary exchange or marketplace. And so we vetted several and are familiar with most of the groups out there. So we probably go that route up to one of the groups that has the experience, that has the understanding of how the SEC and some of the other regulatory bodies are viewing the space, making sure we do it right the first time with the most experienced provider.
We might know a platform for that. So, thank you so much, Grace. We're going to move on to RedSwan CRE. Great. So, my first question to you is, I think for this crowd, I think people need to hear it over and over. What is CRE tokenization to you?
CRE tokenization is, like I said, creating a digital representation of the ownership of an asset in a token form as a security token. And I say that because the SEC is involved with securities in general. Unfortunately, the security tokens are still right now able to be sold to accredited investors, not retail investors, unless we did something like a Reg A+, which will allow us to sell to retail investors up to a certain dollar amount. But in general, security tokens are sold only to accredited investors or international investors. So you talk about headwinds, I think, and also applications that are useful. There are a lot of foreign investors, as well as investors in the United States, who simply just don't have access to all. And when they have access, the big point about that is affordability. So I think, using blockchain technology and tokenization, to give access to Hines properties, give access to Sandy's properties, to give access to some general properties around the country and around the world is something that many people are interested in. I have a client that's probably here from Vietnam, and that's probably the highest mark of transactions globally for cryptocurrency. And there's millions and millions of users there who would love to have access to Sandy's properties if they could invest, because for them, it's not just a matter of getting a yield, it's just a matter of holding their currency state, right? So by being able to put their money into a hard asset in the United States and get return in dollars is substantial for them, because with Vietnam or Nigeria, the currency is depreciating in value very fast, and so if they try to save their money, they're actually losing value very quickly. So we see it as a way to buy the access to affordability and liquidity for real estate, which has never been done before.
And so that kind of goes into the next question is digitizing assets. Is it something new, or is it something that's already been done, but with a new technology component, aka the blockchain?
It is new, just because what's been done before, since the Jobs Act, was crowdfunding, right? Crowdfunding allows people to come in and own a fractional interest in real estate debt or real estate equity, but their money is still trapped, so they don't have the digital effect where they can actually move their money and tradeability of that asset. So that's really the fundamental difference between a crowdfunding platform where you can come in and put in a minimal investment, because sometimes they're still at $50,000 or more, but you don't have the ability to get out of that investment. So you put the money in, and your money may be trapped for 3, 5, 10 years, depends on when the sponsor is able to sell the asset and get liquidity. And for some, that's a big problem. If you think about it, you have thousands of investors that are into your projects, and some of them have life-changing experiences, and they need liquidity from your investment. They come to the sponsor and says, "Hey, Sandy, can you cash me out? I have $150,000 with you. It's been there for 5 years. I'd like to get out." Even if you wanted to get them out, you may not have the liquidity to take care of that person as well as everyone else. So I think this blockchain effect allows this investor to take their shares and go to the secondary market and put them out for sale for the outside market to buy into his shares and give him or her direct liquidity, rather than have to go to the sponsor and ask for liquidity. And maybe you have to take a haircut because there's only one buyer for liquidity. So I think that's one of the major benefits that people see in blockchain technology.
So liquidity is a big thing.
Liquidity is very important for sponsors, and you have billions of dollars of assets, and at some point you need to liquidify to be able to give your investments a return. And those assets, I've been in business selling properties for 17 years. Every time I sell a property for a client, 3-4 years later, that property's worth more money, right? So they sold it too soon. They had the money, they had to promote, they're happy. But 3-4 years, that property's gone up 40-50%. So if they didn't have to sell the property, they just liquefy some of their investment in the property and still hold on to the GP, they're now earning more money on that asset over time, as opposed to starting over again.
So you guys are really the tip of the spear here, right? And I'm so excited that you guys are located in Houston, right? Because we really want to be a part of that innovation, not just locally, but for the world. And we've always been a global player, right? Being in oil and gas. So what do you recommend? How do you recommend new players get in the game who are going to be wanting to do this? Do you recommend it?
Of course, and I think property owners, I think, are now understanding that this is a new technology that's beneficial to them. They understand now that diversity, of being able to have liquidity in their assets is very important. And if this is a tool that can work, I'm sure they're going to use more and more of it, because not only can you tokenize your equity, but you can also tokenize debt, right? So if you look at the full capital stack, if you now have options to plug in with using retail players as opposed to B2B, that's a major positive benefit for both the sponsor as well as the investor on that side.
All right, so because this is a new playing field, we're going to have to build some confidence. How do you see the SEC playing a role in finance?
I think the SEC is a friend. I mean, we got into it because the SEC made a mandate that this form of financing is legal. And I think that they've always had guidelines for securities that are very straightforward. Every broker dealer in the house probably knows what I'm talking about. You have to have a license to trade. You have to have someone with a FINRA license to be able to sell to a third party. And you have to be an accredited investor in order to sell it. You also, when we program the tokens, they have to be programmed in a way that they're restrictive, so that if I'm selling it to Sandy can't turn around and sell it to somebody who's not an accredited investor. If I sell it to a Reg S investor from overseas, they can't turn around and sell that to you. So we program the tokens so that they cannot be traded that way. So SEC has really put down a very good foundation, I think, for managing the securities of digital assets, as well as made it necessary for the secondary trading to be done on digital exchanges as well. So I think that the problem we're seeing with blockchain and assets is in the cryptocurrency area, where the SEC doesn't have guidelines and is now trying to figure out how to put more regulations on that because it's really affecting the end user retail customer in a big way.
And so another application of blockchain technology is going to be with KYC. How's that affecting your business?
KYC is easy. I mean, you basically use your biometrics to identify who you are. And once you're identified as being a real person that is not on the OFAC list, which is kind of a list that shows where the criminals, international criminals are, or anti-money laundering list, then you get a check mark saying that you can actually buy a security token. And from that process, you can now buy as much as you can afford, and you can also sell and trade to somebody who's also affordable or actually accredited.
Excellent. I think we've covered use cases. So I want to know what's RedSwan looking forward to in the near term and in the future?
Well, we're looking for more customers. We have 4.2 billion that we tokenized in commercial real estate. Really, the high quality product that like Sandy and Hines build and develop. We think that could scale to $100 billion pretty easily because of the demand of what we're seeing. We also think that it's necessary to be able to provide a full service to our customers, which means to be able to not only create the token, but to issue the token to investors for the first time, to manage the tokens for our investors on our cap table, and also to have a secondary exchange that we can actually provide liquidity without having to send our customer to a third party. Right now, we do use third-party broker-dealers because we're working on our broker-dealer license ourselves. Hopefully that'll be approved in March next year. But right now, we work with different broker-dealers to help us provide liquidity because that is what has to be done through the regulations of the SEC.
Excellent. Thank you so much, Ed. We're going to move on to Melody. Great. You've been a long-time player in multifamily. How do you think digitizing properties is going to change the landscape of your business? I know you talked about it earlier, but give us a really good idea of what you see the future looking like.
Well, I wanted to answer that question, but step back to a couple of questions that you asked earlier, is that, back when computers were starting to be introduced, don't everybody start laughing at the old guy. But with all the young guys that are in our office, and I said, we're going to go to this thing called computers, and we're going to go from Rolodexes to this database, and it was like, I'm out of here. I mean, there's just no way this is going to destroy the industry. So fast forward to tokenization, and the preponderance of the people we have in our organization here in Houston and in our Austin office are all in their 20s and 30s, and every one of them said, here we go again. Why are we changing? Why are we doing something outside of the parameters of what we've done heretofore? To the point about brokers, we have brokers that bring us individuals, we pay them a fee. That's going to disrupt them. The construction loans, the very back that carried us through 4 decades of some great banks here in Houston. Through the tokenization, we're trying to take it to a full stack of fully funded these projects from start to finish. So with regards to the projects we have done in production right now, we've closed with 3 that we did it the old school way, raising equity through locals that are non-institution, not family offices. So going forward, the tokenization will allow us to not only raise the equity, but possibly raise the entire stack, and then with the opportunity to finance out after we have built that project. So we're looking forward to taking advantage of that opportunity. We're finding that the cost of that money is pretty much in line with the cost of the money that we're paying out to the local banks these days and to some private funds that are making loans to folks like us, be it Parkview, 3650 REIT, or Trez, as an example.
I'm going to backtrack to Chris, but you're both going to answer the question. You both work in multi-generational offices. How do your offices and the folks that are going to be doing this feel about this innovation and transformation taking place. Chris, do you want to start?
Sure. I think most of them aren't even aware of the technology and what it can mean to them. We started, Hines is a fairly large decentralized organization. We have 200 plus offices around the world, and so the educational piece of it is a hill that will be significant to overcome. But I think more entrepreneurial firms like Sandy can make a decision to make something happen, which is, I think, great. While you'll see that innovation probably be led by companies like his, I think we'll be soon to follow, hopefully among the larger companies where we can be fairly nimble and not far behind. But it's getting those folks comfortable with it. Part of it too is just the way that we're compensated, incentivized internally, but everyone has a lot of control over their own deals, so why do something different, right? And it takes a strong, I think, leader. We have strong leadership in terms of innovation, so I think the firm will innovate more rapidly than other large ones, but that's just being a large organization is a challenge we face.
Well, as a boutique operation, he's right. We make, I teasingly say that when I'm talking to Ed or to an investor or to a lender or whomever it might be, is you're looking at the entire voting committee, and we're pretty nimble. So we can move at whatever pace we need to move at, and we can make those decisions. So from tokenization, this is a quick question answer that was given to me by Ed. It was like, yeah, let's do this. And how fast can we do it? And how broad and how deep can we get into this? So, yeah, we're very excited about the opportunity.
So we've been talking, by the way, thank you, Chris, thank you, Sandy. Back to you. Yes. So I wanted to know, liquidity has been such a big topic here today. What have you been hearing about it with your business, with your investors? Is that a challenge? Yes.
So, well, as I said, we're a boutique company, so we're not dealing with institutional family offices. We're dealing with high net worth individuals that are generally writing checks that are anywhere in the $1 million range up to $20 million. And, as I've always said, the preponderance of the people that have aligned with us, which we've only opened the door about 10 years ago, to start taking in equity as a joint venture partner, whether it's ground up or if it's an exit strategy. And all of these folks, I mean, if they were 1 million or if they were 20 million, it's one of many opportunities they have to write those checks. So conversely to what a lot of folks are hearing, we're not hearing from any of these equity folks. And quite frankly, the ones that are reaching out to us are so aggravated with all the other sectors of investment that they're going, how can we pour more dollars into this opportunity? And you might say, well, that's a great problem to have. Why are you talking to a guy like Ed? Because it's exhausting, and it is taking too much time out of our day to gas up the scooter and keep kissing the frogs, as they say, and repeating the story. And even though the success rate is 9 out of every 10 people that we do talk to, the idea that we're able to have them invest with us, for us, we're not hearing the woes of the economy and how can we get our dollars back. Last item is that our horizon is a little bit different. So we have the ability that from the time we started development, it might be 36 months on an apartment, it might be 24 months on a retail center, is that as the equity partner, we go back to you and say, what do you want to do? You have 3 options. You can sell, we can refinance, or you can buy or sell. And until this day, I've yet to have an investor say what he wants to do. He always turns the mic on me and says, what do you want to do? Or what do you think we should do? So far, there might be 14 emails on my phone by the time this is over, saying, get me out. But no, we're not finding that when we get into the fragmented syndication or where you have folks that are taking a percentage of that entire pie, where there might be dozens, 30, 40 people in a project, we've never been in that arena before. So I don't know what that's like to have that person call up that has that need for liquidity or a change in direction.
Thank you very much. So you run a family business, a family office. You guys have been doing this forever. What does this transformation mean? What does it mean to your office, your children who might be taking over the business? The ultimate question is, why did you decide to take this path other than the benefits you guys have been talking about?
Sure. Well, I'm very proud to have two of my sons in the business. And the 31-year-old is the middle child, so he's kind of keeping steady. The 24-year-old has been in for a year and a half. 6 months later said, Dad, we got to scale this baby. So I said I thought I was doing a pretty good job up to now. But the preponderance of the folks that we have in our office, I love youth. I love the energy. I like the innovative concept of what they're doing. I've reinvented myself so many times over my career. And as I teasingly tell everybody in the office, when they say, when are you going to retire? I said, well, my mom lived to be 95 and I'm going to beat her record. So, I look at some of the iconic leaders in Houston, and, Gerald Hines was clearly one of them. And his passion, his love was what he did. And I think that the few times I had an opportunity to talk to him, it was a hobby. And if you love it, which I do, and this is my hobby, it just so happens that my profession, I'm looking really way beyond the scope of what is traditional for some people to say, I'm going to drop the mic and walk away. From our standpoint, because we've reinvented ourselves so many times over the decades, that this is just another easy transition for us. That, I'm still trying to figure out the whole metaverse, all of that real estate, that somebody bought a piece of real estate for $2.5, $3 billion in some corner or somewhere. It's like,
Hey, just come over to my office, Sandy. We'll chat.
it's kind of like, do I have something for you to buy? But in conclusion, I feel like that we're probably always looking for that next opportunity to step into the future. And this is not even the future. We keep referring to it as the future. I mean, this is probably, this has been here for some period of time. Someone would have to educate me, but I just became familiar with it, and my office has become familiar with it. So they're now on board. They still are convinced that you're going to take crypto. And it's like, no, I'm not taking crypto. So they're very concerned about the valuation of what that dollar will be when that dollar is transferred.
Thank you so much, Sandy. Samantha, one last question for you. Within your industry, are folks doing the same things you guys are doing? Do you see yourself kind of as a front runner, just kind of being the cowboys?
So there's kind of two different schools of funds. So you have what we call the crypto-native funds. And those funds they will only invest in you if you already have tokens or cryptocurrency out on the market, and almost always will only invest in you if that is already a public token. That is kind of one extreme. And on the other extreme, you have venture funds that have been around for a really long time, and they're still looking at the market in the way it sounds like, Sandy, some of your customers and your investors are, where they're like, hey, we hear there's a lot of crazy stuff going on here. We're not really sure we're going to dip our toes in yet, so we're waiting to see how it all shakes out. And so there's kind of like this sliding scale of it, and I would say Mercury, we're pretty innovative, especially for the regions that we invest in, which is mostly Texas. We invest all over the country, but we have a lot of companies in Texas, and we work with a lot of big corporations in Texas. And so we're probably more on the forefront when it comes to that, but compared to some of our coastal counterparts, they're levels.
Grace, this is the last question, kind of is for Hines. Can you just expand a little bit on that pain of liquidity?
Yeah, so I think the simplest way to think about it is if you think about just the scale of the private markets, private assets in general, in terms of scale, are 2-3 times the size of the public markets. Are much larger. But the liquidity in the private markets is minuscule relative to the public markets in terms of the amount of liquidity of trading, buying and selling of assets. And I think all that we're really talking about is a potential solution to line those markets out. So creating, I don't think it's just going to be real estate. I think you'll see blockchain technology, tokenization, digital securities, whatever you want to call them. You're going to see people being able to trade in and out of timber forests in East Texas, buying fractional ownership in oil wells, buying fractional ownership in gold mines. It's going to be whiskey if you're a collector of rare whiskeys, art. I mean, you name it, people will fractionalize and then begin to trade ownership of these assets. And so I think it's more about that market problem in the private markets versus the public markets that this is really attempting to solve. So I think that to me is sort of the big idea. And it's very easy for me to grasp that inefficiency.
Excellent. So, last question for everyone, and we'll start ladies first. I think that what we're discussing here today is not only new, it's super interesting, especially for the crowd that came out today, for everybody who's going to watch this in the future. What would you say to them if they wanted to get involved right now? How would they communicate with you? What are the steps?
If you want to get involved in blockchain in general?
You guys are doing.
Oh, okay. So if you want to talk to Mercury Fund, just grab me after this and we can chat and then we can exchange information. So like I said, we're looking for early stage technology investments, software only, seed to Series A. We invest anywhere from $1 million to $4 million to $5 million first check in, and then we really like to be a part of your journey all the way through. So we'll typically take board seats and sit on your board of directors and be there for 5 to 10 years or whatever it's going to take, and that's what we love to do. So if you're an entrepreneur, you're building in the space and you're building something that is relevant to anything we talked about today, we're super interested in hearing from you. We love Houston. We're the oldest venture funds in Houston, and we want to continue to invest in the economy here.
Grace?
I think I'm happy to catch up with anyone if you'd like to catch up on what we're doing or understand how we're looking at this. But I think the simplest way is if you'd like to learn more about an individual opportunity, we're going to probably start to enter the space by providing an offering, a private placement offering, a minimum of $25,000 investment for an asset in the very near term, and I can help you find out how to do that if you're interested at all and do it. So, and then I think you'll see many more after that, after we scale it up.
Thank you, Grace. Thank you, Sandy.
Well, I'd be happy to answer and visit with anyone that would like to ask some questions or discuss our platform any further, but it would be terribly inappropriate for me to say anything other than just contact Ed, because he's going to be the front runner for some projects that we have from ground up and also some completed projects. And Huntington properties, obviously, we're well listed in the social media and in Houston. And you have my name, Sandy Aron, and I am very accessible, so please feel free to reach me anytime after this event or in the future.
And you guys are doing so much with RedSwan CRE, including building out a primary and secondary market for commercial real estate. How do folks get involved? Which way do you do?
Well, we're scaling up. We are excited about what's going on in the market. We're excited to have new clients coming on board on a regular basis. Our weekdays are very, very busy. There's a lot of phone calls, a lot of companies we're talking to, the size of the companies on this panel. People are very interested. So we're looking to bring on more personnel. We want more brokers in real estate that can help us with client relationships, with valuations of properties. I still think that's going to be very relevant to the business we're in, is understanding the core asset of real estate. We're also looking for FINRA members to be our advisors that can actually sell the shares and inventory we're creating. So we're hiring a lot of FINRA members and more technicians. We're looking at technology, building, scaling, and technology is everything. Having your own proprietary technology that will be able to service customers. I was talking to Fidelity the other day, and he said, "Look, we're really excited about what you guys are doing. But in order for us to get involved, got to be around $40 billion of assets. Because as soon as we open the spigot, that's easy, we'll get there. But as soon as we open the spigot, they're going to have demand from their customers who are going to absorb $300 million a month of transactions. So they don't want to open that spigot if they don't have enough inventory." So that's encouraging to me. This is also very encouraging to me to hear the comments from reputable companies that are based in Houston. So what we're looking for is just more capital. We're raising capital, and we'll talk about that. We've done all this so far in just 3 seed rounds of investment, and we're having our final seed round starting October 15th, and that'll be concluding within the year. And then we're going to be going after more venture capital type of financing, or strategic investors who are looking at this on a bigger level. I'll tell you a story though. I mean, just was it last month? Another company by a very renowned Silicon Valley investment VC called Andreessen Horowitz made an investment in the same space, in tokenization. They invested in a company called Flipple, which is tokenizing on the residential side, right? They invested $350 million in this company, and their seed company just getting started, not for as long as we are. But they put $1 billion valuation on it. So that gets us very excited that we have this type of market that we're moving into, and definitely to fill the ranks of personnel and all professionals on our team to help us process that. But I believe it's sincere to stay, like I said, it's now the future is happening now. The key is to be ready to scale up because it's happening very quickly.
Yes, these things do evolve very quickly. We really thank you for being here today. And just to conclude, Samantha Lewis of Mercury Fund, Chris Rector, Principal Mercury Fund, Chris Rector, Senior Managing Director at Hines, Sandy P. Aron, President, Founder of Hunington Properties, and Ed Nwoked, Founder, CEO of RedSwan CRE, and myself, Zena Williams. I work for JLL Technologies. So thank you guys very much.
Before we adjourn, I just want to say thank you for the audience here in Houston. I mean, this has been the first time that we actually had an event in Houston. Typically, we fly all over the world presenting tokenization to different companies and different events, and we decided to do something in Houston because Houston has a lot of strength and is actually, I think, emerging very strongly in terms of technology. So this is exciting to have Houstonians come and support this event. So I want to say thank you very much for coming out. When they say that in order to be successful, you need at least 2 ingredients to be successful. Number 1 is knowledge of things that happen, and then 2, being prepared for your success. And I think that now that hopefully you've learned a little bit about tokenization and real estate, and you're a little knowledgeable, then you can start working on your preparation on your own so that you can continue with your success in real estate. So thank you very much for all coming out. Really appreciate it.
And meet us upstairs for some drinks and snacks, please. Thank you.
And sorry, everybody, I should have said this earlier. If you do want to reach out to me, you don't have time to grab me today. My email is just Samantha@Hunington.com. Feel free to reach out.